Good morning everybody and welcome to this new video. Today we're going to be talking about the US stocks, and in particular we finish our analysis of trading sideways stocks with a rotational portfolio. So let's continue with the test that we started last week, that is with a weekly rather than a monthly rotation. So what we're going to do is test this strategy on the S&P 500 and the Russell 1000 indexes. But before we continue, I'd like to invite you to please subscribe to our channel and click on the bell to stay updated on the release of our new content. So here is the software that we've created internally at Unger Academy for carrying out these kinds of tests. I remind you that this software is exempt from the problem of survivorship bias because we consider all the changes that occurred on the indexes throughout their history. So actually, in the interval considered, which goes from January 1st, 1995 to the most recent available date, we analyze these indexes taking into consideration all the changes that have occurred over the years, and consequently, we don't have the problem of risking to consider stocks that have been delisted over time. So let's start with the Russell 1000. The rotation occurs weekly, more in detail every weekend, and the reference period for creating the ranking is 5 days. And we'll pick only the stocks that go from the 450th up to the 550th in descending order. So let's take a look at the results. The equity line is pretty good. Apart from an initial period in which it performed more or less like the benchmark, it seems that it generally outperformed it, especially in recent years. However, we cannot ignore this extremely high drawdown which took place in the most acute phase of the COVID pandemic in 2020, because such an event, if it were to happen again, would certainly hurt this strategy. It went through the early 2000s pretty well. However, that is quite a distant period in time, and since then the markets have slightly changed, so it is possible that in the future the strategy won't behave in the same way. In 2008 it struggled quite a bit. Actually, it suffered more or less like the benchmark, but what's interesting is that it recovered much faster. Anyway, I'd like to tell you all that, in my opinion, this strategy has a big problem, due to which I wouldn't trade it as it is now. The problem is very simple. Changing 100 stocks every week is obviously extremely expensive. I like this kind of approach, but I believe that before using it, it'd be better to refine it to make it more accessible. Using it as now would mean paying commissions on 100 stocks every week, which would be a very large amount of commission, so it wouldn't be worth it unless you obviously have a huge capital, of course. But now let's see what happens on the S&P 500. As you can see, even in this case, the results are pretty good and interesting. Note that on S&P we select 50 stocks instead of 100 that we picked on the Russell 1000 to have a sort of an equivalent approach to the two indexes. The strategy performed more or less in the same way, perhaps even better in the early 2000s. We see that it produced particularly good results in the last period, while in 2008-2009, just like Russell, it suffered like the benchmark. However, it recovered faster than it, so it seems that there is some advantage in these kinds of conditions. In this case, too, the strategy suffered quite a lot during the most acute phase of the COVID pandemic. And this clearly means that we should pay particular attention to turbulent market conditions. In fact, this approach doesn't seem to be able to protect us in such conditions. The drawdown percentage of the strategy is almost identical to that of the benchmark. However, also in this case, we have the same problem we have with Russell. Rotating 50 stocks per week is obviously pretty expensive, and it would probably be quite difficult to cover commissions and slippage and still make a good profit. So let's say that it is a good idea, but personally, I'd prefer to work on it and look for a more refined version, perhaps with some filters that allow for reducing the impact of commissions and slippage. And that's it for this video. Please, as always, remember to subscribe to our channel and make sure you click that notification bell to get updated on all our new content. And until the next video, thanks for watching. We'll see you soon. Bye-bye.